I don't think we're deluding ourselves. I think that we come from historically a place of challenge and probably misalignment, but I certainly find that in SRSL we are starting to really come closer to the brands that we work with.
But Richard, aren't they really diametrically opposed to each other?
No, I don't think they are diametrically opposed. I think they may have different priorities, but ultimately they should be, depending on the nature of the contract, both aligned to maximise the performance of the hotel, and quite often the fees or the income of the operators are very much linked to that.
Okay, so Askan, please give me one example where, in your experience, this has already been accomplished. Is there anything in your working life or any living memory or whatever where that alignment has already taken place?
For us, it is as a predominantly lease-oriented hotel group. I think we have that experience where we have co-investments, where we share the investment in refurbishing, repositioning hotels, in exchange also for restructuring and extending perhaps contracts, but where there is an element of both having some of the pain, but also both having the upside by revenue shares or so going forward. So yes, this is something we have done, or we are doing with Pandox, for example, in a portfolio they own with us. We have done it just in a repositioning of an example in Munich, the NH Collection at the Central Station there. So yeah, we try to live that approach.
Now, Steve, at the risk of upsetting you, which of course I wouldn't wish to do, let's go the other side. Can you give us an example where you've experienced the fact that the owner, and you don't have to mention names, I hasten to add, but if you do, everybody will be a lot more interested. Sure. But an indication of somewhere where it just didn't work, where the owner and the operator were diametrically opposed?
No.
Never happened. Okay, so don't go with Hilton because they're obviously far too compliant. So.
No, look, I mean, some of the panel have mentioned this already. At the heart of our success as a branded operator, the core of our business is about creating long-term, mutually beneficial relationships. We wouldn't be at the success we are, we wouldn't be able to introduce new brands to new markets, new customer segments at the pace that we're doing if we weren't able to establish long-term, mutually beneficial relationships, which is done through alignment of interests. So inevitably, as part of that long-term relationship, as is the case in every sphere of relationship, there's bumps in the road where that kind of alignment gets knocked out ever so slightly. But what's critically important is that you have that relationship to ensure that you can overcome that.
It occasionally doesn't get too bumpy that you have to continue working together, though, does it?
Thankfully, it's few and far between. But
inevitably,
when you're working across 120 countries with 17 brands, 6,000 hotels, there'll be occasions.
I hear you say only 17 brands?
Yeah, only 17.
What happened to the other 35?
Yes. Yeah. Well, that's enough for now, thank you. Yeah.
Now, Louise, as a litigation specialist, as a lawyer, as someone who's involved in both disputes and marriages, there must be examples in your experience where that relationship did not work and the experience had to be brought to a close. Can you share any examples?
Yes, there are. Now, the way I see it, I'm more into marriages than divorce. But inevitably, there are always some that fall apart. I think that one of the things, if we go back to the marriages, is there has been a much, over the last 15 years or so, there has been much more of a combination of equals. And I think that from that, and we'll probably talk about some of the things we're seeing in contracts to stop that, there is more cohesiveness and more togetherness. So hopefully they will stay together. But inevitably there are issues where things just aren't working out. Sometimes it's a relationship that's broken down, that the performance is trailing off, and why is that? Is it a lack of investment? Is it a lack of performance? And then the relationship can't bring it back together. And I think that as litigation lawyers as well, we tend to try and work out what is the best way of doing that solution. And rarely does it end up in court. Nobody really
That's
wants
on this side of the pond.
That's on this side of the pond, yeah.
It's slightly different in America, as
Indeed.
I'm sure the nods
Indeed.
around the panel are indicating.
Indeed.
Okay, before I move on to a different topic, anybody got anything to add to what they've already said? Richard?
Sorry, Richard.
I was just going to say that quite often the issue is capex. When a hotel isn't performing very well and the owner hasn't got the money to invest, and the operator saying this is not meeting our standards, that's where the difficulties come. And the operator sometimes just, and it does happen, just says, right, we're getting out of this contract. This is not representative of who we are or what we are.
Okay.
And it can be the operator that takes the initiative in that circumstance.
I think the change of ownership group, I think the knowledge base that the owner, you have the tripartite relationship which is coming across from the States, which is the asset manager or third party operator, and I think the fact that knowledge that's coming across is helping in the negotiation on the management agreements, on the franchise agreements. So I think that is creating in itself a relative degree of alignment.
I think so, yeah.
Okay. I'd like to, we've sort of started big picture, general, whatever. I'd like to start to come down the funnel and eventually we'll land the plane, but let's just sort of dig a little bit deeper into the relationship, and let's split the relationship into 3 stages. Planning, development and pre-opening, stage 1, ongoing operations, stage 2, and disposal stroke sale, stage 3. So let's just break those down, start with planning, development and pre-opening, and give me each just one principle or one experience that you have where the alignment of owner and operator within the life cycle of the hotel is particularly important. Okay, so let's start with planning, development, and pre-opening. What particular aspect of that process do you think the relationship can either break down or be strengthened through the relationship between owner and operator? Do you want to start?
Yes, I think one of the difficulties is that when we get involved on doing the management agreement or the franchise agreement, you are putting in place a contract which is 2 or 3 years possibly ahead of when the hotel's going to open if it's a new development. And so trying to agree what the brand standards should be with the changing pace of technology being so quick these days can lead to some issues. And from the owner's perspective, making sure that they know what costs they are and they're not going to have a brand standard change throughout the development process is very key. You know, if it works and it's a good thing for the hotel, then owners are more flexible, but they're generally doing it to a very tight budget. So getting any surprise midway through that period can be really, really challenging.
Okay. William, from your perspective.
Fit out. So fit out of the hotel, fit out costs, what the brand is expecting versus what we can afford as an owner, and we've gone through that where we went through that process on a development that we were working on in Soho, and we ended up actually reducing the development cost by about 15%. To come in line with what was our funding ability, but it was a protracted, difficult process with the intended operator at the time.
And is the intended operator the same as the actual operator?
No, it's a completely different. We actually sold the asset, we sold the long leasehold on the property in the end.
Okay.
So we didn't develop it out, but actually. We had to work hard to get it to a cost level that worked for us. Okay,
Richard.
Avoiding nasty surprises. I think one area that surprises some owners is pre-opening budgets. They are very important to get right before a hotel opens, to get the team on at the right time. But we're talking large amounts of money here. We're talking 1-2 million, even more. And we sometimes advise the owners on, is this appropriate? Are they getting them on at the right time? Not too early, not too late, and and negotiating that budget and making sure it's appropriate for the type of hotel that's been opened.
Okay, Askan, from your experience.
I mean, all of the before, but I think where there's a risk for disalignment is if there are major delays in the development, and you have not weeks but months or sometimes a year delay in the project, and then to make the owner also understand that even though the hotel hasn't even started yet, it has repercussions on us in terms of our corporate planning and in terms of our some pre-opening, but also our assumptions as a listed company. We assumed already 1 year cash flow that has materialized, and yes, we perhaps haven't. You can't say you have had a loss of income because the operation has been disrupted, but you still have a reported loss, so to speak, compared to what you expected and what you communicated to the markets, and to come to some settlement on this perceived theoretical cost is challenging. But if you can work together and also see that you have a long-term relationship, again, as a tenant in particular, and landlord and tenant relationship rather than owner and operator, that is an important element.
It's interesting. Is that something that in the course of a development you will insure against? Is that an insurable risk that you feel it's worth taking in order to bridge the gap between when you open and when you are scheduled to open and when you actually open?
I wouldn't be surprised if there is some insurance for that these days.
There definitely is.
There definitely is. It's not a practice that we commonly do because luckily it's not that frequent. I mean, a quarter can move out or so, but it's when it gets really beyond the quarter, and that's when you get into some territory. And for some operators, it might be less so when they're privately owned, but when you're listed, it's in your 5-year business plan. You need to make up the EBITDA that you anticipated to generate.
Sure. Steve, from your perspective?
I mean, it starts very early on in the process. I mean, and it's we plan for that hotel to be a Hilton for many, many years to come, and sometimes we have to be honest about the property. It may not fit with the Hilton brand portfolio, the Hilton business, or fit in that particular market at that point in time. So our developers work very closely with the owners, the ownership community, to ensure that we, when we do introduce, when we get to that next stage about introducing a Hilton into the market, that will be sustainable for the longer term from a performance perspective. I think the next critical decision is what the right brand and the right management platform is for that business. The brand's a bit more obvious, but with management we offer not, maybe the franchise route with a third-party management and owner-operator solution is a more appropriate model for the owner going forward. Equally, if not, we offer a credible management value proposition to owners should they wish.
And how often are you increasingly finding that the discussion starts with something that I'll just loosely call a manchise, where for 5 years you're going to manage it and then it's going to flip to a franchise agreement? Is that something that is an active part of the discussions that you have?
No, most certainly. That's become the norm for certainly in this part of the world, the management agreements that we enter into.
Yeah.
And in terms of alignment of interests and giving some sort of insurance against performance, that is a critical aspect.
So I've done one where it's just gone the other way, actually.
What,
From
franchise
a
to
franchise back to management,
I
with
have
an
a
option
couple
to
of
franchise
examples
the
of that
Hilton.
as
Yeah.
Yeah, that's called a cock-up, isn't it?
It's
best
keeping your
people.
options open.
or a management agreement to a lease. That was intentional.
Yeah. It's funny, when Howard was talking about taking data and having it broken down by age and sex, that almost describes the panel. But anyway, let's come back to the topic. I just want to pick up on a couple of aspects. One of the alignment areas that I think we're still quite far apart between owner and operator is owners typically go into contracts with operators wanting somewhere down the line to be able to sell their hotel. They want to be able to have the assurance that everybody can walk away, a no-fault divorce or some sort of prenup that makes the termination of the contract possible, and not just possible, but everybody willing. It seems to be a sticking point. Has anybody on the panel come across areas where this has been successfully addressed, first of all?
Well, as a multi-generational family office, we're looking at not 30 years, we're looking at 100 years. So we come at it from a completely different perspective. But in terms of the contracts that we have in place, it is quite difficult. They are difficult conversations to talk about how could we exit them. They have the standard terms, but it's not something that we are particularly focused on in terms of creating, in terms of challenging that area.
I would have to argue that your ownership is pretty unique, and I doubt that there's anybody in this room who has a similar profile of owner that you represent. So if I may just deal with the real world for a moment.
Of course.
I think
it's
Richard
a different angle on the real world.
Richard, you had something to add.
I think the premise here is that it's sometimes higher value to sell your hotel free of one of these contracts so that investors can come with their own brands. I think what we're seeing in more contracts than we were 15 years ago is a cost for breaking that contract, and I'm sure it's a negotiating point, 1, 2, 3 years fees may be reducing as you get towards the end of the contract. So I think that's a step forward. I've seen a few, but very few contracts where you have a break without paying a penalty. Not in the first 5 years, but it could be from year 5 to 10. And that is, because the asset is very desirable and the brand or the management company will take it because they want to be there, and knowing it could even be just for 5 years or 7 years.
Yeah.
I think there's a distinction between the brand
Yes.
and the white label operators. So on the brand, often these days, now that we've done all the big sale and leaseback properties, there's a lot of these hotels have got a franchise already or a management contract in them. If you're going for a franchise agreement, there's very little flexibility to be able to terminate on sale. Some will do termination on notice, some will do with some fees, but generally you're buying a Hilton brand, to take yours, Steve. But who is operating on a day-to-day level is much more flexible.
Yeah.
The white label operators will often be much shorter term contracts generally. They will have much more flex. I've got one at the moment where you can terminate on a month's notice, and it's a month either way. I said, well, that's a bit of a worry actually if the operator gives you notice, owner. But they are much more flexible. So I think you have to distinguish between what it is and who you're talking about.
Steve, did you want to come in?
Yeah, no, I agree. I mean, I think we understand that on the management side, encumbering an asset with a long-term management agreement can cause valuation issues. You're suddenly reducing the church of potential buyers for that owner, and that's the reason for that. So it's nothing to do with necessarily our management capability. It's definitely nothing to do with the franchise. So it's about aligning our interests with the owner, dare I say. So we do offer more flexibility on the management side. We are, frankly, and I'm not just saying this, don't come under huge pressure to do the same on franchise, and I think that inherently is because of the value of our brands. So, but increasingly you're seeing that flexibility on sale. Around the management platform.
I just want to touch on one more sort of in this first bucket, planning and development and pre-opening. One of the things that everybody gets very aerated. Are there any banks in the room? Because banks are anal about the particular interest that they seem to require, which is a performance clause. Now, can anybody just remember the first time or the last time even, a European hotel contract was terminated because there was a breach of the performance clause? And the answer is probably not.
No, but it does start the conversation. So if you wanted to have a sensible divorce, as you say, having a termination performance test gives you the right to start that conversation.
But it seems to be the be-all and end-all from a bank's perspective that there has to be these clauses, and yet they don't have the teeth that the banks seem to expect.
But
I don't understand.
I mean, I can't remember where the hotel was or is, but one of the Marriott hotels, which is one of the ADIA, in the ADIA portfolio, they did exit the Marriott, and they did fail the performance test, both tests, and exited. But the only reason was ADIA didn't want the hotel, but Marriott didn't want it either. So that was the only way it actually worked.
So in that case, the owner and the operator were entirely aligned.
Correct. Exactly.
Perfect.
Okay. Anybody just
No, I mean, it's about the way the performance clauses, Louise, you'll know this, are worded. It's 2 tests, and it's over 2 years, and the right to cure. So that they don't mean anything, really.
I think you really need to work it out, because it's all about the detail.
Yeah.
And I don't think people ever work out that if you fail this one and you cure that test. I did one the other day. I worked out the tests under the agreements take 10 years to be able to terminate if they exercised every cure right.
Yeah.
But also if there's any change in the concept.
But show me a good operator that can't manufacture a budget for next year so that they don't fail the GOP. Let's not get too far down there. Let's move into the sort of the ongoing operations side. So the same question as before, alignment of interests between operator and owner, but what are the points to watch out for when we're in that operational phase? We've done all the planning, we've got everything right, we've got the contracts right, everything is set up, we've done our pre-opening budgets, we're all done. So what are the things that the owner and the operator need to be aligned about, Steve, from the ongoing operation perspective?
I think the key piece is to ensure that we're aligned on what good performance looks like, and that we have a regular cadence of review to understand what good and bad is, and if it's bad, that there's course correction. That's a collaborative process that needs to exist with the owner from the point in which pre-opening phase to opening and through to performance management. We can't disappear. As soon as that hotel opens, we can't disappear into the background and go and develop a number of other hotels. It's critically important that that relationship structure is put in place. What are the budgets? What's the expectations of performance? And a kind of cadence around managing that performance.
Correct me if I'm wrong, but you do in your contracts have an approval process for the owner as far as budgets and so forth are concerned.
Correct.
There are some operating companies that, to my surprise, still don't put that into their contracts. And Richard's nodding his head, Louise wouldn't be acknowledging.
In the first draft.
In the first draft, yes.
Yes.
Does it ever get through?
I'm afraid it does. I've just had one recently, and it's really surprising. But just coming back on what you said, I agree. I think there could be a divergence of interest when we talk about this brand standards or service quality, which is a very important measure for the general managers, the senior management team, whereas the owner is very focused on bottom line, obviously. So that's where there can be sometimes a little bit of a discussion. I need to recruit someone else here because we need them, and you're the owner who's very much needs to hit a bottom line to pay their debt service. And that's where you need to have, as you say, a good dialogue, an asset manager or someone who can facilitate that dialogue.
Yeah.
Askan, from your perspective.
Well, we also have management contracts, and I think both parties need to consider that even though you sign the contract in year X, you have a 20-year term or so. So things can evolve over a couple of decades, and we had one recent example that over the last 5 years or so, the search engine optimization technology has come up a lot, and that's something that was not in some of our historic contracts because that technology didn't exist, and we needed now, we have lead discussions where this external cost we want to recharge, and it's to the benefit of the operation of the hotel, and some owners don't really understand why that is not covered by the marketing fee already, but it's something different to marketing. So you need to have these conversations sometimes. You need, I think, some understanding on both sides that, not like the performance clause, the concept might change over 20 years. It is a living beast, and you need to revisit this from time and be open. Not sign it off automatically, but be open that there might be valid reasons why things evolve.
Okay.
I think CapEx planning. I think CapEx planning is a big area where owner brand operator alignment needs to be joined up in terms of the FF&E, the 4%, how it's been utilised, how it's been spent. Is the reserve been built up to refurbish the hotel? How is that been used? And the whole alignment around the ROI spend, asset management opportunities within that constant dialogue between the owner and operator to make sure that ultimately that bottom line is being driven.
Terrific. Louise, just bring this to a close for a
I'm
second.
just saying, as Askan was saying, in terms of search engine optimization, is that cost there? What we're putting into contracts now is a lot of things like saying, well, should you get the same level of fees for the bookings that come through the OTAs? And we're definitely drafting agreements now where there's a different level of fees that come through, whether it's an OTA booking or a non-OTA booking. Similarly, with fees, what we're doing at the moment, we're doing quite a number of transactions whereby the base fee, which is the revenue fee, is either can go all together. So we've got clients we're doing deals where there's no base fee at all, and it's all then on the incentive fee. And that's absolute alignment, because if you don't have the profits that you're expecting, you don't get it.
Okay, so playing devil's advocate with that, I'm fine with that, but I also think that there should be some sort of step arrangement in those incentive fees, so that if there is a super performance by the operator, that they are disproportionately rewarded rather than just on a straight line basis. Have you come across that?
We've done various different ones with steps in, actually, Russell, you're right, but it's breaking ground.
Yeah. Okay.
But I'm not sure full alignment means that there's no base fee, because even as an operator, you have certain base investments independent of how the exact performance is. So to say dropping the base fee completely, that is full alignment, could be disputed.
There can be service charges or something to give some cost recovery.
I'm conscious that we're starting to reach the end of our session, and all these people who have been prepared for an interactive session have not had a chance to exercise their arms. So, ladies and gentlemen of the jury, of the audience, if you have a particular question, a particular interest, a particular issue that you want to raise with us and have our panel do their best to answer, please indicate and we'll get a microphone to you. That doesn't mean that you can't answer a question. I'm pleased to call on the esteemed, the Right Honourable Howard Field.
You know what I'm going to ask, probably.
I probably do.
And that is, and I'm a little bit out of touch with the latest management agreement, but why have I never seen a management agreement with a pro forma of the P&L in it, and purely a reference to the uniform system, without referring to which edition or what it actually is?
Are you saying that there is no reference to the uniform system?
Usually without saying which edition, and you know, is it when we sign the agreement? Is it the edition that comes out next time?
The ones that I see, sorry to answer on behalf, is the edition as evolves. You know, it says the present 11th edition, but you know, as may evolve from time to time.
And is there ever a pro forma so that people know what they're talking about?
Yes, in some of the agreements that I'm involved in, and yes, down the line, yes, it's happening.
So you've answered the question, and the other panel will agree.
Yeah, well, I'm just sort of in the interest of time.
I agree with Russell.
Any other? Come on, this is your. Well, there's one over there. Yes, there is. There's a hand. Can't actually see. It's a gentleman, mind you. Otherwise, it's a lady wearing a tie and cufflinks.
Possible.
Hi, Russell. It's Rob.
Hi.
I'm in the recruitment business, and you notice there are some rather large holes in balance sheets appearing across the board in different companies. I don't know if you agree with this, but it's information that I sort of...
Are you talking about pension holes?
No,
or are you talking about the
just in terms of the, I suppose, from the management side, the operator side, and it doesn't seem to be getting addressed that quickly in terms of risk and assessment. Again, I don't know if you agree with this, but...
Well, I don't think we quite understand the question, so please...
Well, the thing is, from who's the responsibility in terms of owners' awareness of this and operators' responsibility towards this?
What is this?
The whole balance sheet itself, and the way that there are some quite large discrepancies appearing.
You'll forgive me, but no one on the panel is getting it, and I'm not.
It's the alignment, I suppose, between
So what is the hole?
well,
where is the hole? And you're talking about an HO.
Well, this is, I suppose, it's down to the way that the control, the daily controls, etc., that is affecting the P&Ls, etc. But I know it's not in terms of the agreement side of it, but I suppose I'm more in the live operation. The question probably refers to the live operation during a financial year, and how are there discrepancies between the two or not?
No, I mean we have a responsibility as an operator to ensure that the financials are robust. It's P&L reporting as well as where we have balance sheet responsibilities, and there's audit processes internally and externally to ensure that that's the case. So I don't see it as an issue, quite frankly. But if you have some insight that I need to know about, I'd love to hear it.
Okay. I'm conscious that Peter Hancock was waving a sign at me that said, and I really don't know what that meant. So he told us he wanted us to finish at past. So regrettably, I'm going to have to jettison all the other questions that I had for our esteemed panel. I'm going to move to my last one and bring the session to a close. And I really do want a very short answer, ladies and gentlemen. So in conclusion, in summary, based on what we've heard, based on what you know, I want one example of what an owner and an operator could do immediately, when everybody leaves this room, what they could do immediately to achieve an improvement in the alignment of the respective interests of the ownership and the operation. So, ladies first.
Owners should read their contracts and to see whether things they could do in discussions with the operator to press some buttons to ensure the best performance.
Okay. Steve?
So as well as the operator thoroughly understanding their obligations in the contract, is really understanding the needs, the wants, the values, the strategy of the individual owner.
Okay. Askan?
Leave the contract in the drawer as long as possible and build a rapport and a relationship to the benefit of the property.
Richard?
Yeah, and following on from Askan's point, appoint an asset manager who can really add value in that relationship, someone who asset manages other hotels, similar hotels, has benchmarking information, dealings with the brand, operating company at a high level, who can help cement that relationship.
And William?
Stop opening brands and continuous increase in brand numbers. I think it's creating, the owners at the moment are looking at the new guys on the block and going, we're the old guys, and you don't want to be the old guys in the room. And all these multiple brands are just creating a misalignment in one sense.
Okay, ladies and gentlemen, please join me in thanking our panel.
Well done, guys.